Hello, chart watchers, and welcome to this Friday, June 21st, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the market action today, you can see the Dow Jones Industrial Average continuing to move higher, up another 63 points. The S&P 500 up a quarter, reaching further into record high territory. The NASDAQ down 14 points. And the Russell 2000 lagging, certainly on a relative basis, down about 10.5 points today. 10-year Treasury yield moving back up after briefly moving below 2% yesterday. Volatility index continues within this downtrend that we have seen throughout June. Leading today to the upside, communication services remaining in that strong uptrend that we've seen here in June. And financials also trying to make a breakout above that 2750 area. And if we see the 10-year Treasury yield continuing to push higher, then we'll have a pretty good chance of doing just that. On the other hand, you've got real estate and utilities both perhaps pulling back after setting some new highs recently. But with that 10-year Treasury yield moving back to the upside, I think we're seeing a little bit of a negative impact there. Railroads having a nice day, trying to get back in the groove. We had a double bottom print at the end of May and again just last week. And railroads have been one of the leading industry groups within the S&P 500 as we look back over the past year or two. So it's certainly nice to see that group starting to strengthen again. Also, healthcare products, there are healthcare providers. This is a group that's been had been one of the best performers in 2018, but struggled earlier in 2019, starting to show some life again. And then you can see another group here in the business group, not really having a very good day. We're going to talk about that in a little bit, but Korn Ferry came out with a really bad earnings report. This is a stock that had been underperforming for quite a while. I think its relative weakness was certainly a warning sign, and now we're getting that fundamental news that confirms what we were seeing on the chart. And then finally, CarMax. CarMax having a really strong day today, following this huge run-up that we've seen the last 3 weeks heading into earnings. CarMax beating top and bottom line estimates, and you can see a great reaction in the market today. All right, it's Friday. I always have a smile on my face when you show up, Mary Ellen, because it is Friday. How are you doing?
Happy Friday. I'm doing quite well. Thank you. Yes.
Yeah, we've had a pretty good week this week. What do you think with the S&P 500 moving into record high territory?
I think it's great, and it's certainly a turnaround from a really tough May period. And it's interesting to see some of those names and groups that are bubbling up. We're starting to get broader participation, which is always a good thing with breadth improving. So it's looking good.
Yeah, I think today was kind of interesting because real estate and utilities had actually been leading. Some of the defensive groups have actually been performing pretty well as the S&P hits an all-time high. And that kind of bothers me a little bit. But today, all the defensive groups are back down at the bottom of the leaderboard, even with the market kind of reversing off a little bit those earlier highs. Kind of an interesting development, maybe worth keeping.
Yeah, I would point to yields, and you talked about that 10-year, the yield coming up a bit, and so a bit of a fade on those higher yielding utilities.
Yep. Well, we do have a very special show today because we have got the president of StockCharts, Chip Anderson, with us today to give us an update on the ACP. Chip, how are you doing today?
Hey, Tom. Hey, Mary. Hello, everybody. I'm doing great.
Yeah, you have any thoughts on the market here, Chip? I know you've followed technical analysis. You created the site, for goodness sakes. What do you think here?
That's true. It is very interesting that the S&P is in record territory. I find it a little less. The small caps and the tech stocks being down is not super great, but we'll see.
Yeah, I think I agree with you. Small caps, that's something I've always followed, and I haven't mentioned it yet on the show, but if you all haven't seen the article that Arthur Hill wrote last week on small caps and their correlation with the S&P 500, I think it was in Chart Watchers last week. He wrote a really interesting article that I read through and pointed out some things that I wasn't aware of about the small caps and the fact that they're lagging. So anyway, you might want to check that out. But Chip, if you hang around, I know everybody's anxious to hear the latest and greatest with the ACP platform. So
yeah, I have some new features I want to share with everybody here in just a minute.
Yep, very exciting. All right, here, let's get into our upcoming schedule. You can see there pop culture stocks That will be next week along with Brian Shannon. July seasonality coming up on July 2nd. You'll definitely want to check that out. And then we've got a new show that is premiering. And, I was joking with Mary Ellen before the show, but this is our first spinoff of Market Watchers Live. You and Aaron have a show, right?
Absolutely. We're super excited about it. Chart-wise women. And we're going to flex our female muscles and talk about charts and all kinds of investing. It's very exciting.
It's going to be premiering on July 3rd at 4:30 Eastern Standard Time. So it'll be right after the market closes. Of course, that's 1:30 Pacific time, but everybody mark your calendars and make sure you check out that premiere. No Market Watchers Live on the 4th of July. We will not be here. Sorry. There's really just nothing to talk about. There will be no fireworks in the market, that's for sure. And then July 10th, Tony Dwyer is planning to come back and join us. As far as today's agenda goes, as we mentioned, Chip Anderson is with us today. Very excited to get the latest on the ACP. So he's got a demo for you. Then Mary Ellen and I will go through the what's hot, what's not. First 10 and 10 stock, Humana Inc. And that's talked about healthcare providers earlier. Humana trying to make a little breakout here. And then we'll finish up with a couple of segments, going fishing, and this stock or that stock. And I want you to make sure you check out the poll today, because it's tied into this stock or that stock. We just want your opinion. Amazon or Netflix? Which one would you buy here looking out over the next month or two? Mary Ellen and I will share our thoughts, and then we'd like to get your thoughts, and we'll wrap up the show with that. Okay, let's go ahead and jump in. We've got key economic reports out today. The first was June PMI Composite Flash. That is, it came in just a little bit below expectations, 50.6 versus 50.9. May existing home sales, though, came in better than expected. But with the 10-year Treasury rising, I noticed home building stocks having a little bit of a rough day despite the solid economic report. Looking at that 10-year Treasury yield, and again, this is a longer-term look, but if we go back, we just went on an intraday basis yesterday below 2%. And when you look back to the September low, which was around 2.03, 2.04, we did make a significant multi-year breakdown in the 10-year Treasury yield. I'm actually glad to see us moving back to the upside. I think that Treasuries certainly are overbought, the yield, if you will, oversold to the downside. So it would be nice to see maybe a little recovery there and money rotate away from the Treasuries, perhaps giving the S&P 500 an opportunity to build on their all-time highs that were set yesterday. As far as earnings reports go, we did have a couple of reports out last night and one this morning. Red Hat reported, and of course, IBM is acquiring Red Hat, but Red Hat did come in at $1 versus 85 cents. Canopy Growth, the largest marijuana company in the world, you could see coming out with not so good results, at least on the bottom line. Korn Ferry, talked about that at the open. Disappointing report there. Not a good looking chart at all. And then CarMax coming in with a really strong report. So let me pull up this Korn Ferry chart for you, because I really want you to take a look at the relative strength. We talk about that a lot here on Market Watchers Live. I think that relative strength is one of the most important aspects of technical analysis that I think a lot of day-to-day folks that maybe don't study the market, maybe don't pay enough attention to. But look at what this stock has done. KFY, relative to its peer group, it's been one of the laggards. As you can see, no real relative strength. And look what its peer group has been doing relative to the S&P 500. So the group's been shunned, and then you've got a stock that's been an underperformer in a shunned group. So what do you get from that? You get 1.8 million shares and a 17% drop when they come up with results that were not close to what the street was looking for. Well, earnings, they came up a penny short, but revenues, they were 6 million short. And then to boot, they guided Q2 revenues lower. So, a lot of folks wait for the fundamental news, but I think the technical charting prices in that fundamental news. Wall Street, their analysts go out, they take a look at these companies, they talk to management, they're getting, constant feedback. How's the quarter going? And then they go back and they advise their clients. And so when you see areas of the market underperforming, you can begin to draw some fundamental conclusions that many times will be confirmed when the fundamental news hits. And that's the perfect example right here with KFY. Then we've got CarMax, KMX. And on CarMax, look at the difference here. So CarMax comes out with their earnings report. They beat on the top line, 5.37 billion versus 5.17 billion. They beat on their bottom line, 159 versus 149. And look at what you've got in terms of their stock. This thing has been moving up. It's up $30, over $30 now in just the last 3 months, which is about probably close to 60% over that period of time. They're in the specialty retail group, and they have been one of the best performers in specialty retail. When you look at the longer-term performance of specialty retail versus the S&P, you can see this move up, sideways consolidation. I think this group still remains strong. I think CarMax looks good, and now we're getting that fundamental news to boot. So I think that is all really good news for this stock, and for the industry group, I think continues to look good. All right, as far as the scooter mover of the day, I always enjoy going through this. And keep in mind, this is an exclusive feature here at StockCharts.com. You won't find the scooter anywhere else. Developed by John Murphy, followed by a number of the commentators here at StockCharts, including me, Mary Ellen, or just about everyone. But when you take a look at this, you do have the opportunity to put these panels into your dashboard. I have it set up so that I have scooters, large cap, mid cap, and small cap all moving. So I see what is actually moving in the market. And one of the areas, or one of the stocks that was on the list earlier, I don't see it on the list right now, but it was earlier, and is having a pretty good day, is Baker Hughes. So let me get that up here for you. And I like to look at these charts not just from a scooter mover standpoint, but then also look at these charts from a technical perspective. So not only are we beginning to see the scooter move in Baker Hughes, but what I'm seeing is a downtrend followed by a bottoming head and shoulder breakout. So you got a left shoulder neckline, a lower low, which prints that reverse head. You've got the right side of the neckline, almost perfectly symmetrical with this reverse right shoulder. And now look, yesterday we got the breakout with increasing volume, and we're continuing that. This actually measures up to about the 27 area, which would be right about in here. So this is a stock that not only is on the scooter mover list, but when you pull the chart up, there are some interesting formations set up here. So that is your scooter mover of the day.
All righty. And we'll take it right into upgrades and downgrades today. And on the upgrade side, there really wasn't a lot of action. It was more where these analysts and Wall Street firms were initiating coverage, but they were initiating it to either a buy or an outperform. The first stock we have here is Catalent CTLT. And take a look. The stock is up almost 6.5% on that upgrade, hitting a new high. We're not getting a lot in the way of volume, but we can see at the RSI up here, the stock is a little bit overbought, but your MACD is quite positive. Confirmed uptrend here for sure, but I would wait for a pullback before considering the stock as a buy. The next one is a semiconductor stock. And we can take a look at this because we know that the semiconductors, a lot of these names are in the process of attempting to reverse this bear market downtrend during the month of May. And ENTG does appear to be on its way because it's now up above this 50-day simple moving average. Your RSI is positive, and your MACD is poised to head up above that net neutral zero. I will say it's not getting much of a boost from today's upgrade, so it needs a bit more work before confirming that potential uptrend. Next one is Bunko, FNKO. The stock already was up about 8% yesterday before today's 3% gap up on the upgrade. Take a look at that volume. The stock is breaking out of this nice 6-week base. Again, another one that's a little bit extended here. I would look for a pullback before considering it. The next upgrade that we have here is called the Lovesac. It is a furniture company, and we can see this big gap down here. This was 2 weeks ago. Poor earnings, company outlook, tariff-related outlook is reduced. The upgrade today, not getting too much of a boost, so we are still very much in a downtrend. Stock finding upside resistance at this downward trending 10-day simple moving average. Your RSI is negative, as is the MACD down below this net neutral zero and heading south. And then we have one last upgrade is Fiserv, FISV. And this particular stock already, again, had gapped up yesterday. Today's upgrade not getting a lot of traction or momentum, but we can see that today the stock is breaking out of this 2.5 month base. I'd like to see a bit more volume on that breakout, but we can see that the RSI is positive, as is the MACD. And on to some of these downgrades today. The first one is Avon Products, not really getting hit on the downgrade. It's in a confirmed uptrend. Back this gap up here, the company, there was a bid for a partial buyout from a Brazilian company. We can see the volume. So it does remain in a confirmed uptrend despite the downgrade. Caterpillar, this is an interesting stock in the sense that it has been turning. A number of these industrial stocks are having a good week this week. Caterpillar, in this case, was downgraded, but the stock is trending up despite that. And when I look at downtrend reversals, I like to see the stock breaking up above these key simple moving averages in a bullish fashion. Your RSI is positive, MACD trending into positive territory. We can take a look at another downgrade is CSEE, and this one clearly a response. It's gapping down almost 5.5%. Your RSI is negative. Your MACD is negative. So this is a very negative break. We'll see if the stock can find support at this 200-day simple moving average, but this volume is telling us otherwise. And with that, we now have a list of your upgrades and downgrades. And coming up, we have Chip Anderson. He's going to show us an ACP demo and what's all new there.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
Welcome back, everybody. And it is my pleasure to bring Chip Anderson, president of StockCharts, back in. Chip, I know you've been in here talking about the ACP before, the advanced charting platform here at StockCharts. And I know that there are a lot of exciting changes. And this is one of the biggest things that probably has happened at StockCharts over the last 20 years. I mean, this is a major introduction. So I think everybody's really excited to see what you have to show today.
Terrific. Thanks, Tom. Yeah, I'm glad to show it. We've been working hard on it. I mentioned it about a month ago, and I'm back here with another report on our progress and the features that we've added. I do want to take 10 seconds just to mention that there are other things going on at StockCharts besides ACP. We have continued to move most of our data center up into the cloud, and that project continues and actually should be wrapping up over the next month or so. Very, very exciting there, but that's all behind the scenes stuff. I want to focus on ACP because it's what you can use, what everyone can use now. We've made ACP now available to all of our members. If you log into your account as a member and go to the dashboard, you will see the green Go to StockCharts ACP button here. So this is how you get to our new platform. And just to give, if you're new to this, I want to make sure I reiterate these things. We have two charting platforms now. We have the SharpCharts charting platform that we've always had, which Tom and Mary Ellen were just showing a second ago. Those are server-based charts. They're statically generated, and they will continue. That platform is not going away. Let me re-emphasize this because we get emails from people who are very concerned. We are not getting rid of SharpCharts at all. It will continue to go from now until the end of time. We are adding to your toolkit with StockCharts ACP. If you don't like ACP for whatever reason, you can continue to use SharpCharts, no problem. If you like ACP, you don't like SharpCharts, you can move over. If you want to use both, which is actually what I recommend, then you can do that too. There is absolutely no removal of functionality from StockCharts because of this new ACP platform. What does What does ACP stand for? That's another thing I wanted to mention real quick. It stands for Advanced Charting Platform. And the P in platform is super important. We are already talking to several key plug-in vendors, people who can create additional indicators or additional displays and bring them into the StockCharts ACP platform above and beyond the stuff that we provide. That's really, really exciting stuff. I'm hoping in the next month or so, I'll be able to start to show you some of those tools and demos and things. It's very exciting there. But anyway, let's get back to the basics. So when you click on StockCharts ACP, you'll see this screen here. Again, just reminding you that we're not getting rid of sharp charts. Also reminding you that this is still in the midst of development. We are still in the process of adding features to it. Not all the features are here. We will have, as close as we can make it, parity with all the features that Sharp Charts has. If there's a feature in Sharp Charts, it will probably be a feature in ACP. We believe ACP will actually be able to go above and beyond Sharp Charts in some ways, and we believe that Sharp Charts ultimately will benefit from that. But anyway, I just wanted to quickly reassure again everybody that that's happening. Here's ACP. ACP is all about interactivity. If you want interactivity in your charts, you want to be able to scroll your chart with your mouse. I'm just clicking and dragging here. This is what ACP provides at its core. I'm now using my mouse wheel and I'm able to zoom out, and I can zoom right back in. I can scroll around. I can take a particular panel and make it bigger. I can make it smaller. There's a whole lot of interactivity here that is kind of direct use of the mouse mainly to manipulate the chart and reach in the chart. And there are some times where this is super important to people, and so that's why we're providing ACP. There are other times where this isn't, and that's why we provide Sharp Charts. So keeping that in mind, just one final thing. If you have scrolled out and you move your chart around and you do a bunch of stuff, you always have a little button down here called the reset button. You can use the other two buttons here to move forward and backwards one bar at a time, but you can also use the reset button down here to get right back to the beginning, get everything reset again, and now you're able to watch the right edge of the chart. Up at the top, above the chart, you have a symbol box where you can change symbols. You have a type box where you can change the type of chart. You have a period box where you can change the period of the bars. And for instance, we can zoom in here to 1 minute. And there we see our 1 minute bars for the Dow today. We see the time frames down here. You can also change the duration this way. If you want to change your duration to a set duration, you'll use this drop down. Otherwise, you can use what I was showing you a minute ago, your mouse to zoom in and zoom out. So if we want to see the Dow year to date, there we go. And that's going to be a daily chart. I can then, again, change that into a 1 minute chart, so on and so forth. Now, over on the left side is the indicator panel. It's also the chart manipulation panel. So these are a set of panels. We see there's indicators. I can click here. Now I see chart attributes. I can click again. Now I see color schemes, and I can click one more time, and I see annotations. So these are the 4 panels that allow you to change the look of your chart. The most important one is the indicators panel. It's going to show you which indicators you have on your chart, and it's going to allow you to move those indicators around, add, and delete them. The indicator panel here now, it's changed recently. This is one of the features I wanted to show you, and it allows you, it kind of mimics what you see on the chart. So in this chart, we have RSI up top. We have a bunch of stuff on our price panel, including 2 moving averages, and then down below we have the MACD indicator. We see that same thing reflected here in the indicator panel in terms of the selected indicators. So I can take, for instance, I can take my RSI and I can drag it down here. I've just clicked and dragged the RSI from the top above down below, and now we see that's reflected in the chart here as well. So that's an important thing. I can add additional indicators by opening up this panel, scrolling to the indicator that I want. Let's say I want to add, I don't know, the ease of movement indicator. I click, and now the ease of movement indicator is now here. It's appeared below my chart. I have the ability to move it higher if I want. And then I have the ability to delete it if I don't want. See, I've got the trash can icon here for deletion. I can also delete it in a couple other ways, but the trash can icon here is going to be a major way that I can do that. Now, I'm going to put the RSI back up top just so it looks more like what everyone sees when they first pull it up. Now I want to pull everyone's attention over here to the triangles. So the triangles hint at the new feature that I want to show, the biggest new feature that I want to show today. There are two ways that you can manipulate and change the parameters of your indicators. One is by clicking on the indicator name itself, and then you pull up a dialog box here and you can type in your period and you can change the title and all this other stuff. So that's great, but you're kind of doing it in a modal way. As you're making the changes, you're not seeing them and you have to type in a different period each time. If you want a more interactive way of doing things, and remember, StockCharts ACP is all about interactivity, then instead of clicking on the indicator name, you can click on the little triangle here. And the little triangle off to the right of your selected indicator gives you then what we call the quick settings or the fast settings for each of these indicators. And in this case, I'm looking at my RSI. The only setting for the RSI is its period, which is defaults to 14. But I can now use my my mouse to click and drag and change this period interactively. And while you may not want to do that on every single chart all the time, you have the ability when you're learning indicators to do this and very quickly see what's going on. And you can do this with any of the indicators that we have. So right now I have a 200 period moving average here, this red line that you see, but I can change that very quickly, very easily. I can see what happens when I make it a short-term moving average versus when I make it a longer-term moving average, so on and so forth. This comes more interesting. Let me zoom out for just a minute. And now I can see the red line moving back and forth. Same for all of these other ones. So just a reminder, a lot of the indicator manipulation happens over here in the indicators panel, and you have the ability to add, remove, or modify your indicators here, and you can modify them by typing, or you can modify them by using the slider. I'll show you another example of the slider here in just a minute. I want to point out one other thing while I'm here is that you can close this panel. If you want more screen real estate, once you've got your chart the way you like it, everything's good, you can just click again and now the panel is closed and we have much more screen real estate. I'll also point out that there's another panel over on the right. This panel here allows you to see lists of stocks that are interesting. And so we have market summary information. Later, we're going to have your chart lists. That isn't available quite yet, but we will have it. And also scan results. So when you run our scan engine and bring up results, you'll be able to see those results here. And then you can very quickly just click and change between the symbols. I can go here to the Dow components. And for instance, we can quickly see how Apple's doing, how Caterpillar's doing, so on and so forth. All right, I'm going to progress ahead. I wanted to show you one other feature. Here's a chart I've already created ahead of time that shows a lot of indicators all on one chart. And while it's great that ACP allows you to show this much, it's possible for you to have even more indicators than this. And this is what's called scrunch mode. All of these indicators are kind of crammed into the same window. And as we added more indicators, the price panel got smaller and smaller, which could be okay, or that could be a problem. Tom was showing a sharp chart earlier in this program where he had several indicators on it, and he was able to scroll vertically to see those indicators. So that's what we call scroll mode. So this is scrunch mode, and in scrunch mode, every indicator you add will appear on the screen, and we will resize things to make it fit. In scroll mode, which you get to by clicking here, we now have the ability to we don't scrunch things. Instead, we keep everything a size so that you can see it and really study it, and we allow you to scroll up and down on the chart. I point this out because it's an example of our approach to taking a tool like this and making sure that this tool is super valuable for people that really want to do detailed technical analysis. Not everybody cares. If you're just watching charts really quickly, scrunch mode can work well for you. But for the people that really want to dig into a chart and understand all the features and what the indicators are saying, getting into scroll mode can really help. So I just wanted to point that out quickly. Also point out that there are many different color schemes. Here I've got several on the screen with some more different indicators. Also, that you have the ability to add more than one chart to your window. And you do that with the plus sign right here. We type in a symbol name, and if we want to, we can then hit the plus sign, and that will add in a new charting window like we see over here with IBM. Finally, I wanted to also point out the annotation tool just real quickly. So here's another chart that I pulled up. It's got the volume by price indicator here, which is really nice. You see how that kind of dynamically updates as I scroll in and scroll out, which is cool. But I'm also over here and I've enabled the annotation tool. I've clicked on the little pencil. My annotation tools have come out. But what I wanted to tell everyone is that right now, in order to draw annotations, you have to use in ACP, you have to use the click model, not the click and drag model. We want to change this, and we'll be working on changing this later. But for now, the way it works is like I'm drawing a trend line. So I've selected my trend line tool over here. Color and width have been selected. Instead of clicking and dragging, which won't work, it'll be confusing, you click once, and now my mouse is up, my hand is off the mouse at this point, and I'm just moving the mouse with the button up, and then I click again, and now I've set the trend line that way. So that's how trend lines and other kinds of text tools currently work in the annotation area. We're going to be turning our attention to that, probably in about another month or so, and we're going to try really hard to make it work like what people I think are more used to, which is a click and drag model. But until then, we'll be using this approach. Just quickly, another thing, I'm kind of over on time, but we have our crosshairs and we have our full screen icon. The final thing maybe I'll show you right now is this icon here. You can click on and it will take your chart to be full screen. Let's get rid of this additional panel. And now I've got a chart that's taking up, I've got this panel closed, I've got this panel closed, I've gone full screen. This is a huge chart, and I can put a whole lot of information on here and study it as much as I want. Really nice, really clean, very interactive. And that's ultimately our goal. Okay, and with that, I'm gonna wrap it up. How'd I do, Tom?
You did amazing. I mean, it's awesome as far, as you all have gotten in the development. And I know when you were on here before, I didn't see a lot of these different features. So I know that everybody behind the scenes is working really hard.
Every day there's more work and more improvement. And certainly at least every Friday, we'll be releasing a new version. And then sometimes it's more quickly than that. If those of you that want to track it, you can look at the little version number that we have down here. Each time we release a new version, this number will increment. So you can see that progress.
All right, well, we do have a couple questions. Oh, actually, we have a lot of questions, but we probably only have time for a couple. So I picked a couple of them out here.
Sure.
A question for basic members. When can they start to use ACP?
They should be able to use ACP now.
Okay, that was easy.
Over time, ACP will mimic the kinds of restrictions and features that the Sharp Charts has. In other words, pro members will have more features than extra members, which in turn will have more features than basic members, and in turn, all of them will have more features than non-members. We're in the process of making those final adjustments now.
All right, you showed earlier a 1 minute chart and how the flexibility with the time periods. The question came in, how many trading days can the 1 minute bar be used for? For example, can you do it for 10 straight days?
Yes, so it has the exact same data feed that Sharp Charts uses. Everything's the same as what people who are familiar with that platform use. We currently provide up to 20 days of 1 minute data, up to 60 days of 5 minute, 10 minute data, and we provide 60 or 1 hour, 2 hour, 3 hour data all the way back to the beginning of the stock, or at least the beginning of our database for the stock.
All right, how about saving charts on ACP?
That's coming. It's not here yet. That is one of the major features that's still missing. You kind of have to just get things the way you like it and then maybe keep that up in a tab on your browser for now. Down the road, we will be allowing you to save. We will be allowing you to share charts with others via social media, as well as other platforms and printing. All of this is coming soon. You see the icons down here. Also, as it's kind of hinted at here, the ability to see your chart lists and scroll through them in ACP coming soon as well. We will have a limited capability for you to take a Sharp chart and convert it into ACP, as well as take an ACP chart and convert it into Sharp charts. It will not be a perfect one-to-one conversion because there are some fundamental differences in the platforms that we won't be able to convert. But generally, the charts will be very similar. And so if you have a large number of Sharp charts now and you like them, you won't need to recreate them in ACP. We will do the vast majority, if not all of that work for you.
All right, one final question, and I promise this was not a question from me. I didn't write this. I'm going to piggyback on it, but I didn't write it. From the indicators list, we see PMO, we see MACD, but we don't see the PPO. Is that coming?
They're all coming. If they're in Sharp Charts, they're absolutely coming to ACP.
All right.
We have we plan on spending a lot of focus on getting the indicators up to speed in the next 2 to 3 weeks. That's currently the hope. We're kind of wrapping up some of these user interface issues like those dynamic sliders I was showing you a second ago. Once those are wrapped up and finalized, then we're going to move on to try and make the indicators what we call indicator parity. We're going to be shooting for indicator parity with Sharp Charts, so that if you see it on Sharp Charts, you will see the exact same information, the exact same calculations on ACP.
All right, one final question. I got to ask this before.
Wait, you already did the final question.
Do you have a target date when you think ACP will be complete?
ACP Sharp Charts isn't complete. ACP will never be complete.
All right.
In the sense of it, we will always be adding to these two tools. In the sense of it having completion with all the features that we think it really needs to have on its initial release, and when we go to kind of a 1.0 release, we're still shooting for the fall on that, but stay tuned. And the goal though is to, I mean, it's available now, so it's in a sense you can follow along with us as we continue to add features and make it available. We will try to add features in a way that the thing will be useful to people, maybe before all the features are necessarily available.
Sounds good. I know a lot of folks resist change, but this change looks like it's going to be pretty easy. You kind of direct yourself around the page and figure things out pretty easily.
And by a lot of folks, you mean you, right, Tom?
Yes.
No. Well, and again, our goal is Sharp Charts continues. If you love Sharp Charts, you don't like any of this, I get it. That's fine. You can keep doing what you're doing. You'll be good.
All right. Sounds good. Appreciate you stopping by, Chip.
Okay. Thanks, everybody.
All right. Have a good weekend. All right. Well, we are going to move on now. That was a really interesting discussion. It's amazing. You know, I've been kept up to date on a lot of the changes, but a lot more have been taking place here just recently. And I know you've checked it out a little as well, Mary Ellen. But
oh, it's a fantastic screening capabilities, the ability to line a number of charts up and compare them. Very ease of use and just stylistically very attractive.
Yep. Well, we could start off what's hot, what's not with ACP, because that's hot for sure. But anyway, I know we're going to get into some individual stocks. So I think why don't you go ahead and take it away and start.
Sure.
Past week. What have you seen out there that's hot?
Yeah, I'll go ahead and do that. What I'm going to do is, because we have a fair number and a short amount of time, but what we're looking at here is the Dow Jones Medical Equipment Index. Wanted to point out on the what's hot side, we can see the strength here. Now we're going to go ahead and drill down and take a look at a couple of the outstanding stocks, or certainly the more attractive within this area that is picking up quite a bit. This first one is cardiovascular systems, CSII. I'm pointing this one out because we can see the stock is breaking out of this 1.5 month, the 6-week base. Like a little bit of an uptick here on the volume. Your RSI is positive, as is your MACD, had that black line up through the red. So very constructive. Another one in the medical product space that we can take a look at that is also breaking out of a base. And these stocks are up quite a bit for the week, 9%. This one is up 12%. I would look for a pullback, but certainly this type of action where they are breaking out of these longer term bases, we're getting a nice uptick here in the volume. It's showing real pickup in the interest. RSI is positive, and your MACD had that crossover, also is in positive territory. One other name that we can take a look at in this space is a turnaround stock, ticker CUTR. We can see that it really has been range bound for most of this year. Here again this week, it woke up, if you will. It's broken up above that 200-day simple moving average. We need to see this 10-day cross above that with a golden cross would confirm this current downtrend reversal. I know Tom's going to be covering biotechs later, so I'm going to move on to energy stocks that have been hot this week. First, take you to XLE. We can see this pick up here. Another item that we can look at as far as pointing us toward an uptick in energy stocks is crude oil. This is a daily. It's up another 6% today. So that's really moving a number of these energy stocks. The first name we can look at here is a turnaround. Smaller cap name, FMC Technology. We can see the stock is broken up above these key simple moving averages in my work, thereby reversing this downtrend. Nice pickup here on the volume, and we can see that the RSI and the MACD are positive. One other name that we can take a look at here in energy is PDX, and this, of course, it's not pulling it up, but I certainly have other names that we can take a look at very quickly here. This is FANG, F-A-N-G. We can see this notable downtrend. The stock today is breaking above these key simple moving average, attempting to reverse. We can see that the RSI is positive and the MACD just poised to turn up above that net neutral zero. And one last name or area, I'll just show you the group graph. And if we have a minute, we can then from here take a look at stocks within it. But that's going to be the semiconductors, and they're actually rallying about 4% this week. We can see they're still met with resistance here. But when I come back, I'll go ahead and share some of those stocks in there. Tom?
All right. I'm going to go ahead and first go into the travel and tourism area. And I first want to start, before I get into it, and just take a look at a chart that I posted in my blog just a couple of days ago. You can see that the travel and tourism index has been trending lower. This has not been a very good area of the market relative to the S&P 500. It just keeps moving lower and lower. So I'm not overly excited about it, but the first test that this group really needs to pass is breaking this absolute downtrend line that's been in play for the last year. Now, when you click on, now this was as of Wednesday's close. So when you click on this chart and get a live version, you'll see that we actually are coming up through this trend line. So that is at least step one to begin to repair, some of the stocks, individual stocks in this area. But you can see on a relative basis, we're having a really strong June, but we still, in my opinion, have this overall relative downtrend that's in play. So if you get a failure, if you get up through this trend line, you can't hold it, I think that would be a very bearish sign. But if we can hold it, then I think it could be a bullish development. So I thought I'd pull up a couple of stocks within this group that have started to show some life here. The first is C-Trip, coming up through its 20-day moving average. When it got down here to its recent low, notice the positive divergence. I think this is a stock that's going to make a run for the 50-day moving average. We'll see whether or not we can get through it, but at least in the near term, it's one to keep an eye on. The other is Booking Holdings. Now, Booking Holdings also very strong week, bouncing off the 20-day moving average, volume picking up as it's been making this run. PPO's gone positive. A lot of good things happening here, but after gapping down on big volume in February, you can see where our reaction high was, very close to gap resistance, and here we are getting close again, probably just a couple percent away. So I think, like the overall index, these are two stocks within the group that also are starting to show good signs. I don't know that I would go jumping right in, but if we start to see relative strength in the group and these stocks can make breakouts above the resistance levels that I've just discussed, I think there are a couple that we really want to try to keep an eye on. And then the only other one I wanted to talk about was American Express. The consumer finance area has had a pretty good week, and American Express, after breaking out above this double top, which was around the 120 level back in May. We went through, we came back down close to 120, and we have moved back up again. I know it's not a huge mover, but you can see the volume picking up. This is an area of the market, if we pull up a relative chart, that has been very strong. You can see that the consumer finance space has been going up. It's been going up relative to the S&P 500. And you can see American Express, I'm kind of watching to see all of these relative tops. If we could get that breakout, then I think American Express becomes one of the better stocks in the space. There are probably others right now that are a little better, but I just wanted to point out American Express, one of the larger stocks in that area, starting to show a lot of strength here. All right, and I'm going to let you go through. I know you've got some other stocks to share on the hot side, Mary Ellen. What else do you have?
Yeah, you bet. So I talked about semiconductor stocks rallying almost 4.5% this week. Let's go ahead and drill down, take a look at some of the underlying stocks, because not all of them are in good standing. And by that, I mean they're still below key simple moving averages. They could very well push down their potential advance. So this first one is Xilinx. This was a big winner at the beginning of the year. Drop here on earnings. The stock pulled back to its 200-day simple moving average. It's up about 8% this week. But this is what I'm talking about when these reversals, where they are hitting resistance at downward trending, in this case, 50-day simple moving average. Now, interestingly, your RSI is positive. MACD is just now poised to come up against this net neutral zero, which would be constructive. All we need now is a breakup above that 50-day simple moving average on volume, and Xilinx could very well advance from here. Another semiconductor stock, another big winner earlier in the year that has made that break up above these key simple moving average. This is Analog Devices, ADI. So it's a bit extended here given its big move on the week. It's up double digits, but we can see the RSI and the MACD are both positive. I would look for a pullback before entering. We can see the 10-day poised to move up through the 50 in positive fashion. Let's move on to another area that has been hot and continues to be this week, and that is software stocks. And Adobe came out with numbers on Monday. Great earnings. The stock broke out of this base. Take a look at that volume earlier this week, and we can see the stock is continuing to advance. Now, again, this is another where the stock is a bit extended from this 10-day simple moving average. I would look for a pullback back to this breakout point at the 290 before considering entering this bullish looking stock. APPF is a stock that we've highlighted here in the past. It is a smaller cap software stock, up double digits as well. And this one really didn't pull back with the other names. It just undercut this 10-day before buyers came in, snapped up shares. Very strong uptrend. All of your key moving averages trending upward. MACD had that positive black line up through the red. And Tom, I'm going to pass the ball back to you.
All right. I'm going to just go over a couple of industry groups here in the last week that have really not done very well. And I'll let you take a look at some of the individual stocks, Mary Ellen. But first, pull up the mobile telecommunications group. This group has really struggled this week, and I'm starting to grow a little bit more concerned. This is an area that had been performing really well throughout 2018 on a relative basis. It's okay to come back and have relative pullbacks from time to time, but now what we're seeing is a little bit more action below that 50-day moving average on a relative basis. Notice the PPO, this relative PPO, has now been below the center line for about 2 months. So I think this is an area where we're starting to see money rotate away from. So if I had stocks within this space, I'd maybe start to put my stops a little tighter just in case this group continues to see more and more money rotate away from it. The next group I wanted to take a look at was the recreational services group, the DJUSRQ. First of all, this is a group that really was not looking that good to begin with. But with this past week and the huge drop here on a relative basis, I think we had a relative downtrend followed by a little bit of a flag, and now we are breaking down again. Look at that relative PPO turning down below the center line. This is a group I certainly would be very cautious with right now. And then home construction. This is one that is showing weakness, but I actually think this is presenting an opportunity because it's coming back down, testing that 20-day moving, 20-week moving average, and also an area where we broke out from to begin the year. So this is one that actually the weakness looks pretty good to me to potentially try to look for some of the best performing home construction stocks within the within that space and maybe take a look at them for some investment. So as far as individual stocks, Mary Ellen, what are you seeing as far as what's not hot?
Okay, yeah, what we are seeing this week is a number of the consumer staple stocks that really have been doing quite well, certainly in light of the lower interest rate environment. But we can take a look at a couple of these bellwether, better known names. Campbell Soups. Last week we highlighted this on the plus side because they came out with this very good earnings. The prognosis looked good. They're giving back most of last week's gains, but we're not entirely negative here. The RSI is still in positive territory. MACD still above this net neutral zero. You can certainly stay with the stock. I would look for a pullback back to this 40 area, that breakout. And potentially we want to see the stock find support there. Kellogg, another big consumer staple stock that is suffering or struggling this week. And we can take a look at that. And this is another stock within consumer staple. A number of them are trying to reverse their downtrend. They've had a lot in the way of accounting issues, but we can see it's actually erasing its downtrend for the week. So it's net neutral, but it's not an attractive stock. One last name in the consumer staple area, some of these food product stocks getting hit. And we can see this drop here earlier in the week, huge volume. Now the stock is below these key moving averages, your RSI and your MACD, quite negative. So looks like a pretty confirmed downtrend. I'm just going to cover a couple of these retailers that are negative. Foot Locker, these guys came out with earnings, guided lower, gap down. The stock was attempting to reverse this downtrend, but not with much luck. The stock's down about 3% for the week. And then another apparel shoe stock is Steve Madden. Not an attractive looking chart, but we can see where it was attempting to reverse this near-term downtrend, and that has failed. You want to pay attention when you're looking at for potential downtrend reversals. Pay attention to these moving averages because we can see that they are still in a downtrend, which oftentimes will mean the stock will be met with resistance.
All right.
Yeah.
Take a breath. Did you ever watch ESPN, Mary Ellen?
No, I not regularly. I'm sure I've stumbled on it with my son when he's home.
Well, I know that they used to have a segment on there. It was fastest 3 minutes in sports. And so I think that what's hot, what's not's the fastest, in this case, fastest 15 minutes.
We can rename it.
Stock analysis. Anyway, great job. Great job. We're going to jump in now to do the 10 and 10. There you can see on your screen all of the different areas that we just discussed. Great job. And let's jump in. The first 10 and 10 stock is Humana, HUM. This is in that healthcare providers area. And what I wanted to do is just highlight, number one, we're beginning to see, in my opinion, some real progress on this chart. Now, would I be running in and jumping in and buying it on this breakout? Well, I'd probably want to see a little bit more and maybe do something to lessen my risk. So maybe if it makes this breakout, comes back down, tests this area around 260 as the 20-day moves up, I think you could keep a tight stop. The thing that makes me pause on this stock is that these relative charts are basically all pointing down. And so trying to get a winner in a stock that's underperforming its group, and the group is underperforming the S&P 500, I just think is real difficult. Your odds for success are not as good, in my opinion. So I'd be okay with the stock because it is starting to show some nice absolute strength, but I'd want to try to get it when I have my risks minimized. I think at this point, jumping in at 266 with the 20-day moving average down at 253, I think just opens up too much to the downside. So I like the improvement. I think I'd probably still wait a little bit here.
All right. Next one is CYBR, software security.
Yeah, CyberArk. This has been a great stock. I think it just continues to consolidate, maybe even putting in an ascending triangle. This software course, software has been a great area. Yes, this stock's pulling back a little bit, but that's okay. It happens from time to time before a leader starts to reemerge. I think the overall volume trends here are pretty good. This is what I would watch. I think that the resistance area has clearly been established now at about 135. We need to get a close above that. Recent lows have been around 120. I think that's a trading range. And then perhaps we might not go back down to that prior low. Maybe what we'll see is off of this low, maybe some kind of a new second low form that's higher than the previous one, and then get a breakout. That would be a bullish ascending triangle breakout. So a number of things to look for here. I think we're in the middle of the range. I wouldn't be a buyer here, but I do like this stock and I'd have it on a watch list.
Very good. And the 20-year bond, TLT, is the next one.
Yeah, I'm going to say overbought without even pulling it up. Well, I don't have, this one doesn't really work on the relative chart, but I think if we go to a regular chart here, yeah, I think what you have here is a doji, move up, higher price, lower PPO. I think you got a classic negative divergence where we're going to see some selling in the TLT. And I know I sound like a broken record because I've been saying that for the last 3 or 4 months, and it keeps going higher. But I do think eventually we're going to see more and more money rotating into equities, and I think that will bring a lot of folks away from treasuries. So I would just simply on this chart, just highlight, if this was one that I was saving, it would just make me a little nervous, and I always do the negative divergences with pink, the pink color there, but you can see the lower PPO and the higher price action, and that normally tells me the 20-day moving average not likely to hold or may not hold, and that could bring a 50-day test into play, and you can see that would be a little bit, $5 lower. So I would be a little.
All righty. This next one is the ETF for cybersecurity stocks, HACK.
Love that ticker symbol. Easy to remember. Hack. Yeah, I like this off of an uptrend. I think what we've got here maybe is a possible inverse head and shoulder pattern, which is a continuation pattern. Looking over here, you can see this reaction high coming across right at about 40 and a quarter or so. So off of an uptrend, which we have, I think we go down, we put in the inverse left shoulder, we bounce, that's the neckline, put in the lower low, which is the head, come back all the way up to test this prior high. Normally a downtrend, you'd fail at that 20-day and keep going down. In this case, we set that neckline. I think we're pulling back. I'd watch that 20-day moving average. I think we bounce off of it.
Very good. Next one, Anheuser-Busch, BUD, having a good week.
Yeah, okay. I'm going to take a look at this chart. This bud's for you. Yeah, nice breakout here. Very good volume. It's not going to be in one of my favorite areas of the market. I tend to be more aggressive when I think the market is moving higher. And you can see the Brewers overall have not been doing well. So on a relative basis, this is not a good group, but it is a great stock within a poor group. So what that means to me is we've got a breakout. It's looking good. It continues to outperform. I'm okay with it right now. I think what I would do, though, is keep a tight stop. And that would mean watching these moving averages right here. No reason for it to go back down below. If it does, keep in mind you're in a weak group. So I'd want to make sure I keep that stop in play there.
Okay, next one is a smaller biotech stock. It's SGMO.
Sangamo or Gamo.
Mm-hmm.
Yeah, even with a big lift in biotechs here in June, we're not really seeing it in this stock. So the relative strength continues to drift. I don't know, that doesn't bode well for me. I like to see relative strength, and I like the biotechs now. I think they are starting to pick up. They love the month of July, which is right around the corner. But this one's not really participating. So I would say this, if I'm in it, watch this area right here to the downside. I think you have great support around 9, well, maybe just below 9. What's that, 875 or so? And then to the upside, if it can get back through the 50-day moving average and start to regain some relative strength, this thing could run all the way up to 14. So I think on a reward to risk basis, I'm okay with it right now. Just know that it's not one of the better performers in the biotechs at the moment.
All righty. This next one is in the same space as American Express, STNE. It's a big Buffett holding.
Is that STNE?
Oh, yeah, STNE.
Okay.
Brazilian credit card company.
Yeah, a lot of selling in April on very heavy volume. The reaction move to the upside has been on light volume. It is in a great group, but you can see on a relative basis, the stock is struggling. So the only reason that it's hanging in as well as it is because so much money is pouring into software stocks in general. I like the fact that it did move above the bottom of gap resistance right here, which is good. And so far, it's holding that rising 20-day moving average, which I think also is good. But I love so many stocks in software and stocks that I think look so much better than this technically that I would avoid it just simply because there's so many peers that are performing so much better.
All righty, next one, the Canadian rail stock, CNR.TO.
All right, CNR.to. I like the railroads. I know that they went through a little bit of a rough patch here recently, but I still think this is a group that's going to continue to lead. I would maybe watch these recent lows here. You can see after moving up, went into this little flag, and you can see all these lows came in at about 118.5, 119. Just tested that area again. Notice we've worked our way back through the 20-day moving average and trying to get through the 50. I would just treat this as a trading range for now, off of an uptrend. So I fully expect the next breakout of this range is going to be to the upside.
Okay, then we have Illumina ILMN.
All right. Now, this is in the biotech space, and this one has been rolling. This is the type of stock that I would be interested in looking at biotechs. Now, I don't own this one only because it hasn't had any kind of a pullback, so I could get in with less risk, but I really like the stock. Biotechs talked about it, coming out of the basement here, but look at what Illumina has done relative to the biotechs. It has been outperforming for 5 months, and now that the group is starting to move a little bit, the stock is going straight up. So this is absolutely the type of stock that I would like to own, and if you're in it, congrats. I think this one goes higher. To the downside, I think any kind of a pullback closer to 340, and I'm not saying we're going to get there. I think eventually we will get a 20-day test. That is, in my opinion, going to be the best entry, but I think the chart looks really good here.
Super. And then this last one is a nice 9% yielder, EFC.
All right, EFC, Ellington Financial. I have to say I'm not familiar with the stock, but it is in the mortgage finance group, which has been very strong relative to the S&P. It's had a rough June so far, but otherwise been pretty good. This has been a stock that just kind of goes along for the ride. It's not one of the best performers based on the relative chart there, but it's not a bad performer. And so I think as long as it holds this breakout area and that rising 20-day moving average, whoops, I don't need that, and this 20-day moving average right here, I'm okay with it. I like the volume coming in here as we make this breakout. So EFC looks good. There may be others in this space, maybe a little better, but I don't have any problems with this one.
Very good.
Last one, or is that it?
That's your it.
That is it. All right. So those are the stocks that we just went over. These charts will be included in the MarketWatchers live blog later today, so feel free to check that out if you'd like. When we get back, we'll look at a new segment, Go in Fishin', and wrap up with this stock or that stock. Hey, welcome back. Let's take a look at what's going on in the market. We are seeing some selling here, as you can see earlier. After 11 o'clock, we had gotten up above that 26,875 area on the Dow, but we have pulled back. We are still holding on to gains on the Dow right now, 56 points. NASDAQ down 10, the S&P 500 relatively flat. A lot of underperformance again on the Russell 2000. This is a time of the year when we typically do see some strong relative strength from the Russell 2000, from that small cap area, but for whatever reason, we have not really been seeing that this year. I wanted to point out on these market movers as part of this update, I like a lot of times just to set up this top 10 here, and then I can go from index to index to see what is moving to the upside and to the downside. So, for instance, one of the stocks covered at the beginning of the show, CarMax, they came out with their earnings. This stock is the top mover in the S&P 500. You can see that the 10 in 10 stock that we started with, Humana, making the breakout, second top performer in the S&P 500. And if you're wondering maybe what is not working out so well, you could take a look at the percentage down. And here you can see Sealed Air, which is struggling. And if you're somebody who likes to buy on weakness, you could look at a stock like this and see that it's pulling up, or pulling back close to a key price support level. And if this is your style to try to get in on tests of support, you can see how quickly you can use the dashboard and that part of the dashboard to zero in on a possible winning trade. Okay, we are going to move on now to our final two segments. This first segment is going fishing, and Mary Ellen, we're gonna try to go fishing here and find some stocks maybe that others are ignoring or have been ignoring for a period of time, and maybe they present some really nice opportunities. I know I just talked about small caps and the fact that they have been underperforming. Do you have any small caps maybe?
Yeah.
You
Yeah,
might
let's
fish.
dip our fishing rod in to the mighty waters of the market and see what we can pull up here. The first one is Grubhub, and I'm going to be covering smaller cap stocks, as Tom mentioned. So the ticker on this is GRUB, and we can see the stock has really been struggling. Now, this is last fall's poor period in the market, but it has not been participating in the year-to-date rally we've seen in the market. It has everything to do with competition. These guys deliver food. They have contracts with the number of the major McDonald's and other large food organizations, but it is with more recently, the stock is starting to turn. And so when I look at this downtrend reversal attempt, I want to see the price break above these key moving averages. So it's broken above that 10-day, which is the green, broke above the 50-day. And now it is finding support at an upward trending 50-day simple moving average. We have that golden cross where the shorter term moving average crosses above the longer term. So I would look for a continuation of this advance. It's trading at about 71.5. This 85 with the 200-day moving average is going to be your next area of upside resistance. If it breaks above that, we are much freer to go even higher. We can see the RSI is positive and the MACD just trending upward positively here. And then another small cap name that we can look at that is potentially turning is PRAH, and this is in the medical health sciences field. It's a little bit further along in its advance, but a number of healthcare stocks really struggled this year given the political headwinds out of DC. But this first reversal, this bar here on big volume, was telling us that this downtrend may be on its way to reversing. Same phenomenon where it's broken up above the 10-day. Now, again, resistance here at this 101 200-day simple moving average. So if we can break above that on volume, because we are getting positive signals from the RSI and from the MACD, very well could be on its way. Another smaller name that we can take a look at is in the gaming industry, Boyd Gaming. And the gaming area has been a little wishy-washy, if you will, but we can see in line with the broader markets had a tough May. This one, I talk about breaking above key moving averages, so it is very much further along on its potential downtrend reversal, and we can see this shorter term 10-day poised to cross up above these longer term moving averages. We already have an RSI and a MACD that are in positive territory. So again, a continuation of this upside with the 10-day crossing up through the longer term moving averages would really be quite positive. And then we have time, I'll just go ahead and cover one other name here. This is DANA. DAN is the ticker. It's an auto parts stock. And again, same type of phenomenon where the stock really had a significant downtrend here during the month of May, is reversing, and this shorter term key simple moving average poised to break up above it. We can look for the stock to continue to advance. The RSI is trending upward. MACD just today entering into that positive territory up here above that net neutral 0. So Tom, there are my fish for today.
All right. I am going to take a little different approach, and I'm going to go into the biotechs. And you might say, well, you're late to the party because the biotechs have already had a huge move in June. Well, biotechs tend to move, and when they move, they tend to go for quite a while. So I'm saying I'm not late to the party. I've actually been trying to wait on the biotechs. When you look at the chart here on the biotech group, you can see that after we made the move to start 2019, these reaction lows to the downside held 1925 to 1950. You can see 4 separate times that this group came down to that area. And that when you see multiple tests like that, that tells you that you've got pretty good support at that level. I didn't draw in a resistance, but you can see this resistance up here around 2050 up to 2075. That's been key resistance. Well, we finally broke out of that trading range in April to the downside. And when we had our first rally attempt, look at where we failed, right at one of the key areas of resistance, because that prior support, once broken, becomes resistance. That's TA 101. Well, that failure and at the 20-day moving average resulted in further movement to the downside. You can see right there, 20-day test failure. But notice at the end of May, lower prices, and I think I see a positive divergence here. And not only did we go through the 20 and test the 50, but we went through these price resistance levels, and now look at the PPO strengthening. So I think pullbacks in this space are going to be very interesting, and I definitely want to be fishing in the biotech area. Now, if you're looking at this and you say, well, you know, it's already made a big run in June, you missed the boat. I want to show you relative strength, because this tells you a whole different story. And this is 5 years. I'm going to go back 10 years, because biotechs have these big moves. And so the last 3 to 4 years, you can see we've been in this relative downtrend. And so this is where I would say I'm going fishing, because the money on a relative basis, even though biotechs have done well in June, so has the overall market. So we're really not seeing a whole lot of relative strength just yet. When biotechs get relative strength, then you can look back to this period 2011 to 2015, which is when you wanted to own biotech stocks. So if we are starting to maybe begin that period, and I'm not saying we're there yet, but the fact that we're starting to make an absolute breakout to the upside is a good sign. And the other good sign is, and I want to just show you the seasonality here. If you look at the seasonality and look at July, look at this over the last 20 years, July has gone higher roughly 3/4 of the time. So 3 out of every 4 Julys, the biotechs move higher, and that's better than any other month. Also, if you look down here at the bottom, it gives you the average return by calendar month. Notice July 4.4, the next highest, January 1.6. So this is by far the month that's coming up here in just 10 days or so, I guess a little less than 10 days. When July starts, that is fishing season for the biotechs. I mean, you want to get the rod out and be looking. And the fact that we're starting to see some technical improvement, I think could be telling us that maybe we're going to have a really strong period ahead over the next several weeks. Whether or not that turns into 5 years of outperformance, very difficult to say. We'll continue to watch it. But if the market continues moving higher, I would suspect that biotechs are going to be a really good area that you're going to want to consider. Now, as far as individual stocks, what I would simply do is go in here to the large cap group. That's going to give you a little bit more comfort, I think, getting into the biotechs. We could talk about some small cap biotech stocks, but many of them have just a couple of products. And if one of them happens to come out and say something negative, you can really get hit. So I probably would try to stick with some of these big cap names. But the one I already talked about, Humana, with the 10 and 10, that's a really nice looking chart right now. And you can see the scooter 81.8, which is pretty good when you consider how bad the biotechs have been. The fact that you've got a large cap biotech in that range, I think is pretty good. But look at Insight. I'm just going to go ahead and finish with this one because we've got an overhead potential breakout. And I'm going to pull this up on a relative chart so that you can see what's going on here. But again, you've got biotechs, which have been drifting lower. You've got, on a relative basis, biotechs, maybe we're getting ready to break out to about a 2-month relative high, which would be an improvement. That's what we have to improve and start somewhere. That's what I would be looking for. And if we do make that breakout, look at Insight relative to the group. It is at a 52-week high. It is almost at a 52-week high on its absolute chart, but on a relative chart, it is already there. Volume has picked up on this move to the upside, and on a seasonality basis, let's go in here and take a look at Insight. And over the last 20 years, you can see not only is July a pretty good month for the stock, but August adds another 4.8% on average over the last 20 years. So you've got a couple of really good months coming up. And May, June, July, and August, when you put those 4 months together, that's one of the better periods for this stock throughout the year. And again, if we go back, take a look at that chart one last time. In May is when we started to see the money coming in, and now we've got it still coming in, trying to make a breakout. I'm telling you, Mary Ellen, I think biotech is an area that I would do a little bit of fishing.
I would agree with you.
Some of them, not all of them.
No, there's a selection there process, but I'm with you.
Yep.
In fact, I wrote an article about it for this week's Chart Watchers.
Yep, go with the leaders. I always say that, especially if you're going with a group that maybe you're a little skittish about, I would stick with the leader. And if the leader falls apart, then you want to make sure you keep your stop in play because the group overall is not very good. All right, we are going to move on to our final segment, this stock or that stock. And this is a fun segment. We've done this one before, Mary Ellen.
Mm-hmm.
But we're tying the poll into this. We're going to give you a little advance notice. The last two stocks that we're going to both take a look at and kind of debate the merits back and forth are going to be Amazon and Netflix, which are two of the FANG stocks. The poll that's running right now, we want your opinion. Which of those two stocks, just looking out the next month or two, we're not talking about 20 years from now. We're not talking about just this afternoon, but over the next, 4 to 6, 7 weeks, what do you think between those two stocks? If you had to buy one, would you buy Amazon or Netflix? And we'll talk about that one at the end of this segment. But before, I'm going to give you one, Mary Ellen, to start off here.
Alrighty.
And I am going to give you, let's see, I'm going to give you two small caps. You just talked about small caps.
Alrighty.
And these are both specialty retailers, and they've both been decent performers. But I'm going to see if you like one or the other. EYE versus PAG. So I think that's National Vision versus Penske. EYE versus PAG. What do you think?
Oh my, this looks like one of my gone fishing stocks. It's a smaller discretionary name. Interesting. We can see the stock is attempting to reverse this downtrend. Not normally my cup of tea because I can see at 31.5. It can easily find resistance less than 10% away at 33.8. We do have those other outside metrics that are flashing positively. We do have this bullish green line up through the red, 10-day up through the 50-day. This is a potential barrier that has me concerned, but let's go ahead and take a look at PAG.
Yeah, I like the double bottom that's on that EYE chart too. I don't know if it, obviously we need confirmation to take out that high that's in between, but yeah, we went down and tested that low. And
right.
You show some strength, PPO or MACD on your chart there going positive. So
yeah, we certainly have a lot in the way of positive signals, but this again, for my work, I view this as a barrier or a roadblock. If it were to, once it breaks above that, then you're in very good standing. I'm sure all these moving averages will be trending upward. So, but it might be the winner. I don't know. Let's just take a look at PAG.
Yep.
Oh, well, Tom, I like this one much better.
I knew you were going to go with this one.
Oh, gosh, so predictable. Yes. Okay. So we have the stock now breaking up above these potential areas of resistance, but also it's breaking out of this nice base, a nice longer term base. I'll just draw that very quickly here. Take it to this prior high back here in February. My drawing skills are... And so we can see at about this 47 level, we're not just now breaking out above that. And hard to tell, but we do seem to be getting some decent volume on the breakout. Your RSI, this is your MACD, of course, up here in positive territory, as is the RSI. So this stock, for me, does appear much freer. So a nice breakout here at about 47.5 makes this one quite constructive. So PAG it is.
All right, you're going with PAG over EYE.
Yes.
Okay. All right, what do you got for me?
Okay, the first I'm going to do a couple of large bellwether tech names, IBM versus Intel, INTC.
All right, so both tech names, but different areas of tech. All right, let's take a look. First, we have IBM. Well, I mean, I'm looking at this overhead resistance around 140. We got this big gap down on heavy volume. The reaction high that day was at 140. The reaction high at the beginning of May was 140. And here we are right now, 138.91. So we definitely have a little bit of overhead resistance here. When I look at IBM relative to its peer group, it has been mostly downtrending since it hit a top back in January. And its group relative to the S&P is just kind of okay. So I'm not a big fan there, but I know Intel has had a really rough go of it, or at least it did back in May. It is starting to strengthen. Oh boy, you're going to do it to me here. I don't even know what I'm going to do here. I'm going to say based on relative strength, I think I'd have to probably go with IBM, even though it is at resistance. Intel's moved through the 20, so you certainly could be aggressive here. Keep a stop maybe down below this 46 area. If it goes back down below the low we saw last week, I think that would be a big red flag for me for Intel. A lot of volume on this selling in late April, early May. We've seen warnings in semiconductors. AVGO, Broadcom recently came out with a really big one. So I guess based on all of that, I would probably go back to the IBM chart. I think it's acting better than Intel. It certainly doesn't have all the volume and distribution, the appearance of distribution like Intel has. So I'm going to hold my nose and pick IBM over Intel.
All right, IBM is your pick.
All right, I'm going to give you another one here. Now, this one, gold has been really hot. Neither one of us talked about that, but gold has been really hot this week.
Yeah.
And the gold miners have been particularly strong. I've got a small cap and a mid cap gold miner for you. So I'd like for you to pick which one you like here the best. The first is Eldorado Gold, EGO, or at least I think that's the name. And the other one is Agnico Eagle Mines, AEM.
Oh, my.
Pick between those two.
Yeah, look at this gap up here. Huge volume. That is very, very constructive. The stock is breaking out of this base. I'm taking you back to the beginning of April, and the stock really had a decline of significance there. But on this upside, really quite simply, when you see stocks reversing downtrends as they begin that uptrend, just take a quick peek and look at your volume characteristics on that downtrend reversal. And most of your higher volume days are on up days, and that's very constructive. That's signaling accumulation. This gap up yesterday was on tremendous volume, and it's not really giving it back. It's up again today. Your RSI is positive, as is your MACD. So I like this one. And the other one, AEM.
I'm sorry.
Alrighty. There we go. Okay, yeah. So this is another one. Agnico Eagle Mines, we can see this stock also gapped up this week. This stock broke out a little bit earlier back here in this beginning of June. And normally when you are looking at a leading group, gold stocks have been leading for this month. The AEM, the fact that it did break out earlier, certainly than the previous stock, that is signaling that the stock is a leadership name. That first guy out of the gate, that's your leader. We can see it's finding support at this upward trending 10-day simple moving average. However, at this juncture, the stock is a little bit overbought. So let me just say this. I would be a buyer of this on a pullback, again, because it's giving that leadership signal, but near term, EGO looks a bit more attractive because it is only now breaking out of that base. So your decision is going to be based on your timeline as far as your outlook for gold, as well as what type of a trader you are. But near term, I'd like EGO, but AEM is the leader, and longer term, I like that. Is that allowed? Can I split my decision?
Wow, I'm not sure what you just picked.
Well, shorter. We're going shorter term, so EYE. I mean EGO. EGO.
There we go. I got too many E's in there for you. Too many.
Oh my goodness.
All right, what do you have for me?
The next group is the healthcare insurance CI, and against Molina, MOH.
All right, CI versus MOH. All right, well, first of all, we're going to have to understand that we've got a group that is really just kind of, it's been struggling. So healthcare providers, they've come off the bottom on a relative basis. We did kind of hit bottom back in April. Maybe this is the start of something longer term, but we're still way off the relative high that we saw back in December of last year. Healthcare providers was one of the best areas of the market back in 2018. That has not been the case so far this year. So just laying that out there to start. Cigna, I like the fact that it's back above the 20 and it's been holding the 20-day moving average. That is the good news. The bad news is the volume on this move is suspect. We saw a lot of selling, a lot of distribution in April and May, and I'm not really seeing that type of conviction coming back into the stock on this move. So this is the type of stock that if I was in, I would have my stop on that 20-day moving average. If it closed below, I'd be out. No questions asked because of the relative strength. I'm concerned about the group, and the stock has not exactly been a very good stock within the group. So make sure you keep your stops in play if you're in this one. Molina, MOH, there's just no question on this one, Mary Ellen. Molina, big move up. Look at the volume trends, much different look. When we look at relative strength, literally just a couple weeks ago, Molina was at a 52-week relative high to the group. So if I was going to get in the group, there is no doubt Molina would be the one I'd get into. And it's worth pointing out here, too, there were multiple tops in this 145, 150 range. And so when it gets up to 160, I was talking about this earlier with the stock. I want to see it pull back. I think it was it might have been Illumina that I said, maybe we get a 20-day test. This is what I would be looking for, because here's a stock that was a leader. It pulls back. At this point, you can get in with very little risk to the downside, and then it makes a move back up. So I'm going with Molina over CI. And we got one more. We both have to do it, and we both have to do it pretty quickly, but we're going to go Amazon versus Netflix. I'm going to go first. How's that?
I like it. Go right ahead.
Great. And I'll just give you my 2 cents worth here. On a relative basis, I like broadline retail. Broadline retail is breaking out on an absolute basis. It's starting to show some really nice strength here on a relative basis as well. The stock overall, I think, is back up above the key moving averages. So Amazon, I'm fine with. Netflix, also improving, but the internet group, not as strong on a relative basis. I go with Amazon. What do you say? You got about a minute.
I'm going to, here's Netflix. We can see that it's been in a trading range for most of this year. It's picking up a bit. All of this has to do with some highly anticipated shows coming up in July. It's not interesting to me quite yet. I would like it to break out of this base and see more volume. Amazon is a different story. I own this stock. I love it. It is further advanced in this downtrend reversal, poised to break out, and the MACD and RSI are positive. I'm an Amazon fan. Netflix has a lot in the way of competition going forward, so I'm picking AMZN.
Okay. I'm a fan of both these companies, by the way. I have Netflix and Prime as well, Amazon. So I think they're both great companies, obviously been great performers for a long time, but we are going Amazon over Netflix, and so is the audience. They're agreeing.
Oh.
That means Netflix is where we should be putting our money right now. That's the way it works. But yeah, there's the poll, 83%. Wow. I didn't see that.
No love for Netflix.
Yeah, I did not see that coming. 83. I would have thought maybe 55, 45, something like that. Yeah, I mean, there was somebody just came out recently, I think, and I know you keep this information, but didn't somebody just come out and maybe it was Piper Jaffray talking about Netflix and the fact they thought that their next quarterly report was going to be strong?
Yeah, a lot of it has to do with there's a lot of buzz about some of these new shows that they have that are going to be initiated and coming along. So they're also doing an ad-supported tier that's supposed to add revenues. So they do have some interesting things coming up the road, but we have Disney heading for them. So,
yeah. Well, I mean, that is a wrap. I hope everybody enjoyed Chip's update on the ACP. If you came in late, you'll definitely want to go back and check out the recording. Chip went over some new features that's been updated since the last time he was here regarding the ACP, the Advanced Charting Platform. And that's one of the most exciting things, I think, at StockCharts over the past several years, and maybe one of the most exciting since the company formed back in 1999. So you definitely want to check that out. Yeah, it was a lot of fun, Mary Ellen. Always have fun when you're here with us.
It was great.
Yeah, absolutely. All right, just to give you a quick update, the Dow right now is up 24 points. NASDAQ down 15. Russell continues to lag the other indices, down 12 points. I do want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we will see you back here on Monday. Happy trading.